Hey, good morning, everybody. Welcome to Friday, August 2nd. Yesterday was kind of a flip-flop day. We started out in the great news, but ended up with President Trump tweeting and taking a big decline. And Dave and I will talk about that. I'm sure he'll want to know why that really happened. So stay tuned for that. And then again, remember, we have our free report on retirement strategies over here. As soon as I click the button to share it with you, there you go. So it's a great opportunity to get this great report on retirement strategies. All you have to do is text the word retirement to 863-285-3815. And again, I want to thank you for joining us today. If you like what we're doing here, please like our page, Statler Financial Services, and share this video with your friends and family. Dave will be with us in just a moment.
It's William Joel and the boys in the band there. Good morning. We're at 8:36 now, 24 before 9, and it's time to check in on the market and find out how your money's doing today. Well, if a bull is your favorite animal, it's going to be hard to find for the last 48 hours or so because, well, just hasn't been fun. Let's go downtown and find out why. Statler Financial Services, the destination. Phillip Statler is on the line. Phillip, good morning. Red ink yesterday, and boy, was it a pile of it, huh?
Yeah, it was. You know, it was interesting because we were off to a great start yesterday. I mean, the indexes were up over 1%. And then all of a sudden, President Trump gets out his phone, sends out a tweet, and what do you know? We have a 180-degree flip. Now we're down over 1%. So
boy,
it was a big switch yesterday.
Yeah, we sure were down 280.85 points on the Dow. NASDAQ down by over 64. S&P was down by darn near 27. You know when the NASDAQ only losing 0.75% in one day was the best news of the day? It was a crap hole a day on Wall Street, and most of the credit goes to, like you say, President Trump and his cell phone, threatening to slap another 10% on Chinese imports. And given the jobs picture that we got this morning, probably ain't going to improve things much because in addition to only 164,000 jobs added in June, federal government revised a crummy May number downward and revised a decent June number just down to mediocre. So, 3.7% unemployment rate doesn't sound bad, but boy, the rest of it really doesn't add up well, does it?
No, it really doesn't, you know, and so it just shows, again, I feel like a broken record some days, Dave, that our economy is slowing down. I mean, the report this morning, Lowe's laying off several thousand workers. We had a company, I can't remember who it was, a couple of weeks ago, laying off 10,000 workers. So we're starting to see that this employment picture is starting to change a little bit every month.
And Paulson is starting to sound kind of smart all of a sudden by saying, no, we're not going to drop interest rates like trousers right away. We may need those arrows in our quiver as the economy slows down.
Well, yeah, and look at what the 10-year Treasury did yesterday, too. A huge decline. I mean, we're down. Last time, I talked, we were at 2.2, 2.3. We're down to 1.87 right now on the 10-year Treasury. Definitely an inverted yield curve when it comes to those interest vehicles less than a year.
Absolutely, and that's a flight to safety indication. Probably the better indication of investor sentiment really is looking at those interest rates, because when something goes haywire, investors fly to a place where they can get no money, at the very least guaranteed, and that means federal bonds. And when you start seeing the 10-year Treasury bill go down from 2.02 down to 1.87 in one day, that says there's an awful lot of smart money going where they know they're going to get nothing, but at least they're not going to lose money, right?
Exactly right. And then we're seeing gold shoot up this morning about 1.5%. So another fear factor playing in there.
Yeah, gold always being a panic number as far as an investment is concerned. When it flies and changes radically, that also gives you an impact that somebody on the stock market is saying, whoa, Nelly, get me out of this for a few days, right?
Exactly. And so we're looking at both of those vehicles, right? We're looking at the 10-year Treasury, we're looking at gold, and both of those things are kind of telling us the same thing.
Absolutely. The other stuff going out of the federal government this morning, just other things of import that just kind of either reinforce or otherwise change things. Imports and exports, they reported our import numbers in June down 1.7%. That was kind of what we had in mind, but our exports down even more than that, down 2.1%. The average work week in this country went down. That's another indication of the employment picture slowing down by 1/10 of an hour. About the only good news that can be reported out of the government data dump this morning is that our hourly wages accelerated to an annualized rate of 3.2%, but kind of we alluded to yesterday, from the standpoint of investors in the stock market, increased wage costs aren't necessarily good news. They just are for the consumers in the economy and our ability to spend.
Well, that's exactly right, Dave. As those employment costs rise, that means that's going to be a lower bottom line on corporates' income statements. So that means they're not going to make as much money to reinvest also. Now, I know the consumer getting more money, it typically means they're going to spend that money in the economy, and that should boost economy some. But I'm not sure which hand spends more money, given if they have it in their hand. So I think that's going to weigh some on corporate earnings. And we're seeing really a mixed bag today, too, when it comes to not so much what the earnings were, but what they're looking at going forward.
Yeah, understood. Yeah, as far as wage gains, I've always said it's more a matter of timing than anything else. We want to see an improvement in the average wages in the country, but it's better when we get that news on the heels of a bunch of other good news, too, because then we can say the companies can afford it and it doesn't concern the stock market any.
Well, that's true. So that's going to see, I think as we look at how jobs play out the rest of this year, I think that's going to be a direct indication of how the economy is doing.
Understood. Let's see if there's any indications out of the individual companies reporting. I know you got a few reports this morning to share with us.
I do. I got ExxonMobil, the big energy giant. They beat by about 11 cents, 12 cents a share. And so their revenue came in above forecast also. And they're trading up this morning, not by much, about 1/3%, but still up, which is good. We've got some I call them social media things. Maybe they don't, but things like Pinterest, Etsy, things like that are internet based, reported. Pinterest, they only lost 6 cents a share this last quarter, which was better than expected. They were expected to lose like 8 cents a share. Revenue was above forecast, and they've got more monthly active users, which is always a good sign when you're in that social media type area. And I don't know, they may not show up on your big winners list, but they should today, Dave. They're up 15% this morning.
That's cool. That's one of the social media sites that I have trouble figuring out how they make serious money, since they're really not one of the big players on the advertising revenue picture.
Yeah, they're getting it somewhere.
I'm glad they are, because we need some good news this morning.
We do. Hey, on the other front, we got Etsy. It's a marketplace for, I call them artists, but people that create stuff and they can sell it. You can order it, and so they beat forecast by $0.01 a share. And however, revenue did miss. But they've increased their guidance for the rest of this year, even though this last quarter wasn't such a good deal. They're trading down a little over 3.5% this morning.
All right.
Companies like GoPro.
Camera people.
Yeah, camera people. They missed by $0.01 a share. Their revenue was also off just a little bit. But they raised their full year guidance. They've seen an increase in their subscription service. And so they're up about 4% this morning.
Interesting. We're seeing a lot of the smaller players actually showing up with decent guidance for a change.
We are. And the last one I want to give you is Square. Square is you swipe your card. I got Square in my office for tax stuff. People can come in and pay with a credit card on Square.
I was going to say A lot of my advertising customers are using that because it's portable, it's efficient, you can do it on an iPad, and for a lot of retailers, the discount rate for the credit card transactions is lower as well. How are they doing?
So they came in, they earned 21 cents a share, and that was 4 cents better than expected. But their revenue top forecast, but their guidance, their forward-looking guidance, didn't quite come up to what Wall Street had expected. And then on kind of another note, and I didn't even know this, but Square owned a food ordering platform called Caviar.
Really?
And they're selling that to DoorDash for $410 million. But they're trading down this morning about 10%.
That's it. I did not know they had an additional division. I knew what they did, but I didn't know they'd branched out into delivery services. That's interesting.
Yeah.
Get back to their core business. We mentioned it at the outset that it wasn't fun yesterday, and we mentioned it at the outset that things weren't looking great this morning after the jobs report combined with still hangover from President Trump's tweets. 45 minutes before we start trading this morning, Phillip, do we have a trend?
Yeah, and it's not a good trend, Dave. It's a red trend, and the red trend has gotten worse since the job numbers have come out. We've got the Dow down about 90 points this morning. We got the S&P 500 down a little over 13. We got the NASDAQ down 64. We do have gold getting pumped up there, up 1.1% to $1,448 an ounce. Silver is retreating off of a pretty high number of $16. So they're up to 16.1 right now, down about 0.5%. Crude oil took a pretty big bath yesterday, but rebounding a little bit today, up 2.3% to $55.19 a barrel.
And compared to yesterday morning at this time, it's actually off by a little bit. So they really had a bath yesterday, didn't they?
Yeah, they really did. I can't remember what it was down, but at one time I think I saw it down like 4%.
Oh, I hate to cheer for it, but okay, good. World markets, the Asian rim is very trade sensitive, so it shouldn't be a big surprise that the Asian markets were down by 2% and more at the close this morning. Europe also trending downward based upon the bad news coming from elsewhere in the world. Phillip, somebody needs advice to stabilize this mess, and mess probably isn't a bad term for it this morning. How do I make contact with you?
Then give us a call at 382-0037 to get some help coaching you into and through retirement by starting with our financial X-ray analysis report that kind of determines how much risk you have in your current portfolio. And then we continue to have our free report on retirement strategies. To get your free report, all you have to do is text the word retirement to 863-285-3815 or follow us on Facebook. And you can click the link right there on top of this video. So, and then join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays and 10 a.m. on Sunday mornings on News Talk 730 a.m.
Beat me to it. NewsTalk730am.com is where you can stream it as well. Phillip, thank you so much. We will see you on Monday morning, all right?
All right, buddy. Have a great weekend. I look forward to it.
You too. Enjoy. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything.
Hey, folks, thanks for joining us today. I appreciate it. I hope you have a great weekend. I look forward to speaking to you again on Monday morning.